Do things.
Yeah, there is a concern. I've heard people use sort of the analogy of we're taking a sledgehammer to the departments and agencies. And, what I would say if I were advising the team is as you have your findings, make sure you're putting them into different categories. So when it is time to look at the technology modernization efforts, that's what we have to look at next. And those modernization efforts need to look at how can we accelerate the timelines. I will tell you that oftentimes these technology projects get bogged down, mired down in overlapping regulations and overlapping authorities and not knowing, is this something that our department and agency can do? Or are we supposed to use something from another department and agency? We need to streamline the processes. You have these talented CIOs who oftentimes basically have their hands tied behind their back trying to implement scalable technology at speed. We need better speed. We need better innovation. We've got a lot of the right talent in place. We just have to get the bureaucracy out of the way, but keep the pieces of the bureaucracy that help with data security, privacy of information for citizens. But right now, we've got a mess. It's sort of like if people want to picture at home, look at a cabling closet. We all know those cabling closets where it's just a mess of wires. Nothing's labeled, nothing's organized. And you're just trying to get in there and do the best that you can when you have an outage or you need to add something new to maybe your home wiring closet or at work. But if you walk into a clean cabling closet that's been streamlined, it makes it a lot easier to sunset retired equipment and put brand new equipment in. That's what DOGE needs to do, and it can be done in a way that is safe and secure in the process.
Right. Yeah, we'll see if the country has its own AV guy coming in to get that thing cleaned up. Teresa, good conversation. Please come back. Teresa Payton, former White House CIO with Fortalice.
I'll come back anytime. Thank you.
All right, still to come. CNBC officially out
NBA All-Star Weekend tips off in San Francisco this evening, and just in time, CNBC Sport is out with its inaugural rankings of the most valuable NBA franchises. At number 1, the Golden State Warriors, worth an astounding $9.4 billion, nearly $2 billion more than the Knicks, who come in at number 2. The Los Angeles Lakers joined the club as well at number 3, followed by the Chicago Bulls and the Houston Rockets to round out the top 5. Our senior sports reporter, Michael Zanian's the man behind all those rankings, and he joins us here at Post 9 to talk through it all.
You're laughing.
What's up with Golden State?
Oh, it's all about the building. You got to realize that when they built this building, which they own, it was right around the time they were winning all those championships. Steph Curry, best guard in the league, tremendous sponsorship revenue. They have about $200 million more revenue than any other team in the league, and their sponsorship revenue is about double any other team.
What do you make of the rest? Any surprises as the list came together?
You know, some of the ones in the middle really surprised me. One of the big ones, Cleveland Cavaliers, their revenue and value much more than I thought it was going to be. Tremendous business success there. Sponsorships, they're doing a great job building, bringing in other non-NBA events to that arena. Very high revenue for that market.
Do we have a good view as to maybe not top of the list, but most improved players, or relative to a new owner getting in, for example, having made the most?
Well, I think what we're seeing is because of the new TV deal that kicks in next season, an average of $6.9 billion a year, 160% higher than the current deal. From team 1 through 30, they're all up a lot in value. In fact, if you look at what owners have paid versus what the teams are now, go to the top of the list, Golden State, 24% annualized return in price versus the $450 million that was paid in 2010. Go to the bottom of the list, the Grizzlies, right? Never been to an NBA championship. They're up 19% annualized since 2012.
Yeah, all boats floating on that. You know, of course, I got to ask you about the Knicks. I got my Knicks tie on here. But you pegged them at $7.5 billion. This is the rare team that's actually in a publicly traded stock, right? Madison Square Garden Sports. It's the Knicks and the Rangers plus some other assets. Total market cap is $5 billion. I know that's not going to match up. There's probably tax effects, all this stuff. But that seems as if it's kind of like feeding off of the size of the market and the historic value of it. But what else is playing into that? When you see the fact that the market is like not willing to pay it in terms of the stock, how does that play into the process?
I think a lot of it plays to the fact that the Dolan family controls the stock, right? So it's very heavily insider controlled. You also have a mix of related assets with Sphere, which actually owns the networks that broadcast the games.
Yeah.
Finally, I'm thinking of Lazary and the Bucks. When you have people who did well, then sold, I mean, what lessons come out of that?
What's very funny, I was at a panel once when shortly after he had gotten out of the Bucks, he was talking about the fact that when he bought in at like $550 million, he said the team was more profitable than it was when he sold it, for a much higher valuation, obviously. I think these teams do not sell on multiples of earnings. It's much closer to multiples of revenue. And look at the Celtics. They're on the market right now. They're going to be sold. They don't have a great arena situation. The opposite of Golden State, right? The Bruins, their owners control that building. But the Celtics are going to go for a record sale price. The last highest value was $4 billion for the Suns. This is going to easily surpass that.
Yeah, remarkable figures there. Great work. Mike, thanks for being here.
Thank you.
Appreciate it. And be sure to check out all the details on CNBC Sports NBA valuations. Be sure to go to cnbc.com/sport.
As we go to break, check out the following mystery chart. It's an international name. It's a luxury name. It is beating the S&P over the last year and reported an end-of-year sales surge. We'll talk about who it is and how it's beating the competition after a short break.
Welcome back. That mystery chart heading into the break. Hermes gaining post results. Robert Frank here with the details. Robert.
Leslie, good morning. Good to see you. Well, it's been a very mixed quarter for luxury. Hermes, though, posting an 18% jump in sales. That was better than the 11% expected. The big driver, of course, was leather goods, those famous Birkin and Kelly bags. Sales there up 22%. The U.S. also strong, with the Americas up 21%. Europe got a big boost from tourists, mainly from the U.S. They're buying in France and Italy. Now, they don't break out China, but Asia ex-Japan was positive. That was surprising, up 10%. CEO Axel Dumas saying, quote, in a more uncertain economic and geopolitical context, the solid performance of the results attest to the strength of the Hermes model and the agility of the house's teams, who I want to thank warmly. The company, by the way, giving all employees a bonus of 4,500 euros because of these strong results. Now, overall, China's weakness still a big drag on the luxury sector. Problems at Gucci driving a 12% drop in sales at the owner Kering. Porsche also cutting 2,000 jobs in Germany. They cited a 29% drop in EV demand in China. Even Hermes calling the outlook in China, quote, complicated for the year ahead. Carl?
Robert, appreciate that. Robert Frank today. Busy morning, of course, although muted movement of the indices. Dow's down about 53. Money Movers begins after this.
Visit a store today.
And restrictions apply. Insurance.